Okay, so the crypto market just took a massive hit, and now it's standing at a crossroads. Seriously, the bulls are screaming the bottom is in, while the bears are shaking their heads, calling this a trap before the next big drop. So let's just dive right in and unpack what the analysts are actually seeing on the charts. And really, this is the one question on literally every trader's mind right now. Is this the moment you jump in and buy the dip? Or is this a classic bear trap? You know, the kind designed to lure in hopeful buyers right before the floor drops out again. The answer, well, it totally depends on which signals you're paying attention to. All right, so let's get our bearings. The market took a serious nosedive, right? It smashed through some key trend lines, and let's be honest, it shook a lot of people's confidence. But now things have kind of stabilized. The price is testing this historically super important level, a level that could really decide where we're headed for the next few weeks, maybe even months. Right now, you can just picture the market as a battlefield. Prices have stopped plummeting, which is good, but the bounce back, it's been hesitant, to say the least. And this uncertainty has basically split the experts into two camps. You've got the bulls, who see the green shoots of a real recovery, and then you have the bears, who are convinced this is just the quiet before another storm. We're going to break down both arguments for you. Okay, first up, let's hear from Team Bull. What's giving them hope? What are the positive signs that have them feeling optimistic? Well, according to a bunch of sources, there are actually some pretty compelling technical signals that suggest this rebound might just have legs. The number one, single most important argument for the bulls is this. The price stopped falling exactly where it was supposed to. That area around $112,000 for Bitcoin, that isn't just some random number. It's a massive support zone that has been incredibly strong in the past. The fact that buyers flooded in right here, that is a huge signal. And if we dig a little deeper, the bullish signs get pretty specific. Analysts are pointing to a successful double bottom test. Now that's a classic reversal pattern where the price hits a low, bounces up, and then comes back down to successfully retest that same low before taking off again. This rebound's also happening inside what was a 60-day consolidation zone. Think of it like a solid foundation for the price, an area with a ton of buying history. And on top of all that, we've broken through some short-term downtrend lines. And Ethereum, well, Ethereum is looking even better, showing an even clearer reversal pattern. Yeah, this quote really just nails it. For the bullish camp, that 112K level, it's everything. It's their line in the sand. As long as the price stays above it, the argument for a recovery is still on the table. But if it breaks below, that changes the entire story. And this is a fantastic illustration of a point that almost every analyst agrees on right now. Ethereum is leading the charge. Its rebound has just been stronger, its chart pattern is a much cleaner W-bottom reversal, and its daily candle, it formed what's called a bullish engulfing pattern. That's a really powerful reversal signal, where a big green candle completely swallows the previous red day's candle, basically wiping out all its losses in one go. Bitcoin, on the other hand, looks a lot weaker in comparison. But hang on, let's not get ahead of ourselves. The bears, they have an equally compelling story to tell. And frankly, it's a bit more concerning. They see this recent bounce not as a sign of strength, but as a textbook trap. Let's shift gears and look at their arguments. So the bearish case is built on a much bigger picture, a longer-term view. They're pointing out that the main upward trend line that was holding the market up for months, it's been shattered. That's a huge structural break. Then we've got a death cross on the daily chart. And yeah, it sounds as ominous as it is. It's a signal where a short-term price average drops below a long-term one, and it suggests momentum has seriously shifted downwards. And to top it off, this rebound is happening on low volume, which means there's not a lot of conviction behind it. And the price is still stuck way below several thick layers of resistance. So the main takeaway for the bears is pretty simple. A bounce is not a reversal. From where they're sitting, this is just the market blowing off some steam after a huge fall. It actually creates a better price for them to jump back in and short the market before the next big move down. That is, unless, and this is a big unless, the bulls can somehow manage to reclaim those key resistance levels. And that brings us right to the heart of the matter. You've got the bulls and the bears staring at the exact same chart, and their entire arguments hinge on just a few very specific price levels. This is the battle zone. This is where the war is going to be won or lost. And what's just absolutely fascinating here is the incredible consensus we're seeing among different analysts. We've pulled data from several popular trading channels, and as you can see, their key levels are almost identical. I mean, just look at how tightly clustered those numbers are for both support and resistance. These are the numbers that matter, period. First, the floor.
$112,000. This is it. This is the bull's last stand. It's the bottom of the previous range and the exact spot where the recent sell-off finally ran out of gas.
And according to all the analysts we looked at, if this level breaks decisively, the whole bullish argument just collapses. A close below this price would probably open the floodgates for a much deeper, much faster sell-off. It would be a clear sign that the bears are in control. Okay, now for the ceiling. We're looking at roughly $115,700. This is the first major test for the bulls. It's a wall of resistance that's been built up from a lot of prior price action and market structure. This level is where we're going to see what this rebound is really made of. If the price can slice clean through it, that would be a huge win for the bulls. But if it gets firmly rejected here, it would pretty much confirm the bearish view that this was just a weak temporary bounce.
So you might be asking, why these specific numbers? Well, a lot of analysts are using a tool called Fibonacci retracement. It's basically a way of projecting potential turning points after a big price move. And those resistance levels we just talked about, around 115,700 and 116,500, they line up perfectly with these key Fibonacci levels, which makes them mathematically significant battlegrounds.
Okay, let's zoom out for a second. Beyond all the day-to-day noise, some analysts are looking at the weekly charts, and they're seeing some much larger and honestly more worrying trends starting to develop. So here's the roadmap that the long-term bears are watching for. Step 1, they expect this current rebound to fail at that key resistance wall. Step 2, they're looking for the price to fall back down and decisively break through the 112K support. Now, if both of those things happen, it would confirm a major trend reversal and basically signal the start of a long, drawn-out downturn. And we're not just talking about a few bad days here. The sources looking at these bigger weekly charts are warning that a break of that 112K support could kick off a corrective period that lasts anywhere from 1 to 3 months. That would fundamentally change the market's entire character from bullish to bearish. And if that multi-month downtrend actually takes hold, where could the price end up? Well, the targets being thrown around are pretty severe. Some analysts see a drop to 90,000 as the first major stop. Others, who are looking at even longer-term structures, have targets as low as $60,000 or even $40,000. I mean, that's what's at stake if that 112K support level fails. To wrap this all up, here's the crucial point. The market is at a decisive crossroads. It's a massive tug-of-war. On one side, you have these short-term recovery signals, right? The bounce from supports, Ethereum looking strong. But on the other side, you've got these really serious long-term warning signs, like the broken trend line and that looming death cross. The entire market is basically holding its breath, just watching these key levels. The next few days, maybe the next couple of weeks, they're going to be decisive. So the big question is, who's going to win this battle? Will the bulls manage to push through that resistance and prove this is a real recovery? Or will the bears take back control and drag the market down to those much lower targets? The battle lines have been drawn.